your muscle memory, which is the short-term market action, October, November and December spoilt you.
Yeah.
Every day there was something for the bulls. Every day, US markets was giving you a leap up. Flows were almost, the appetite to buy into Indian stocks and global equities, I think, was insatiable. Now I think we are doing what markets should have ideally done long time ago. They are consolidating. And I think this is pure consolidation both at the global level and at the local level. I will consciously not use the word reversal. I will consciously use the word pause. I will consciously not use the word that the tide has turned, but I would say that the bulls right now are taking it slightly easy. I think this is a fair market. This is a market where if you consolidate, if you spend some time, just get your energy levels back, prepare your portfolio for the earnings season, maybe some pre-budget rally. I know this time that's vote on account, but historically pre-budget, price action. So I think you actually would be seeing price action only when you will see earnings season or you will see commentary coming from management now. So the bias is flat. It's not up, it is not down, and markets are simply consolidating. And I think this is very healthy, because if markets would have not consolidated, then we would have reached what could be called as a frenzy level. The strategy is that you want to be a buyer on dip. That does not change. See, in October, November, December, you were buying higher and you were selling higher, which is that it was imperative for you to stay in the market even and participate at higher level. Now you'll have to buy closer to the support levels. I think we would reach there in next 2 or 3 days, 300-400 points on the Nifty. But you want to be a buyer at that time, rather than saying that, okay, I will get prices at my level. That will not happen.
Yeah. And, just to, cement that point further in terms of the kind of range that we've been at, take a look at the last 6 trading sessions, and 21,500 to 21,800 is what we've been confined to. So that clearly has been a very range-bound market at hand. Yesterday, third straight day of losses, and pretty much you had consolidation. It seems like the likes of an HDFC Bank heavyweights like an Infi as well felt the heat. Well, on the flip side, you did see the the PSU Bank Index hitting a record high, and IT really succumbed to selling pressure. A lot of those heavyweights cracked in trade, seeing its biggest fall in the last 5 months. So even when we're looking at the texture of the market with that December euphoria waning, a lot of the heavyweights seem to be feeling the heat.
It's consolidation, Avan. Let's see if now what you could ask, and what you need to perhaps now figure out is that will a consolidation in large cap, will it kickstart a moment of volatility or a reversal in small and mid caps? So typically, when global Qs are flat, when markets are not going anywhere, flows have not been that bad, negative flows are not there, will the bias in some of those overheated small and mid cap stocks, could that be negative? Or they will also consolidate in line with the larger market? I would say that downside in small and mid cap stocks in the near term, perhaps of 5 to 10%, cannot be ruled out if markets continue to consolidate, because that's where everybody would in a sense get anxious. Arey, market kahin nahi ja raha hai, time to book some profits. I will not be surprised if that narrative actually comes in. I mean, remember, January has not been a great month. History has told us that 7 out of 10 times large cap stocks have gone down, 6 out of 10 times small cap stocks have gone down. There could be a skim from the top. I mean, there could be like a, some seasonality and some weak players could be coming out. So the template is global Qs are flat, large cap stocks are consolidating. Will small and mid cap stocks, will they get into some kind of a downward spiral? I'll tell you what I would like to flag off here, and this is one data which I think is very important, is you look at flows, because a lot of attention is being centered around flows. January 2024, FIs will come and they will be buying with both their hands. Now this is the flow picture. 2019 pre-COVID, hello sir, they didn't come. It was a long Christmas holiday. 2020, this is pre-COVID, Aisha Avan. COVID did not hit the world. 2020, they were not buyers at all. 2021, this is after COVID, when markets had recovered, FIs were not back. 2022 and 2023, which are more important numbers, it's a negative number, Patricia?
Yeah.
I rest my
case. Yeah. Numbers speak for themselves.
Numbers speaks for them. So imagine if this scenario happens.
Yeah.
We all are assuming that FIs will come. I double check with Patricia on it. If this comes out true, which may happen, 2022, 2023, There's nothing scary in the world. But if the flow is negative, which it could, then we're looking at a different market. Because everybody is assuming that it's going to be plus 40,000, not minus 40,000. So this is my limited case that markets are really relying a lot on the so-called FI money to come and bid prices higher. What if? So ask yourself, what if now?
Yeah. But the consensus calls in the street, I mean, for Nifty's December target, they're anywhere between 20,200 to all the way up to 24,000.
Yeah, so let's look at the most bullish consensus. The most bullish consensus, I think, most bullish number, I think, is Jeffries. That's 24,000.
Yeah.
The I will not say.
UBS is 20,000.
Yeah, 20,000. So what is Jeffries saying? That frankly, from a index of 21,000 to 24,000, if it's a most bullish scenario, that's about 10%. And UBS is making a case of a flat year. So nobody is making a case that it's going to be like a year where you actually will be growing higher than the long-term average. See, anything about 12-13% is the long-term average for Nifty compounding. So at the beginning of the year, brokerages have come out and said that it's going to be a flat year, and best case scenario, you will be compounding lower than what you've compounded historically. One. Second, consensus view on metals, that it's a sell. Consensus view on banks, which we all know. Where I think the differentiation is coming for me, I think is IT services. There seems to be a consensus by that IT has become cheap. There seems to be consensus by that IT will do rather well. There seems to be consensus view that these are great, fantastic companies and they will come out of this so-called, abyss they've hit into because of AI and because of demand destruction. So out of that, metals function of China, no one can guess anything there. And IT is where I'm surprised. This is another graphic which is surprising me. Consensus buy calls. Where is HDFC Bank in this? So HDFC Bank actually is not coming up as a consensus call. That's interesting for me. And then you got individual stocks. Cities got IndusInd Tower, HSBC, Nykaa. Those are individual calls here. But for me, the surprise bit here is IT is a consensus buy, and HDFC Bank is out of the consensus view in terms of what the brokers are saying.
I think we've picked up just the top 4 stocks. I'm sure it's there in the list.
It's there, but it's not making us part of top 4. For me, that's
it's ICICI Bank, Axis, Reliance, L&T.
Maybe everybody is so tired now. I don't know. All I'm saying, it's not there.
Yeah.
Maybe it's not there in top 4. Let me put it this way.
Yeah. But the Q3 updates so far have been quite okay. I mean, all the ones that came out just yesterday as well. It's an inline set from Bajaj Finance, from Ujjivan, and good actually from IndusInd Bank as well as IEX.
See, Bajaj Finance is growing at a rate which is higher, in line with the marginal positive bias. And I'll tell you why these numbers are important. Not because of the growth rate number. These are important because that was a quarter when they were hit because of what Reserve Bank of India in a sense indicated to them. And everyone thought that Bajaj Finance would be consciously slowing down their business because of what messaging they got from Reserve Bank of India. But despite that, if they are growing at about 35% plus, 7% quarter on quarter, which actually is in line, and it's actually slightly better if you ask me. I will say they're slightly better than what the street view was. I think you got to doff your hat to them. IndusInd Bank, I think the turnaround is visible. Quarter on quarter, the CASA ratio, the growth what they have, I think is visible. Whether it is small bank or large bank, the banks are growing. And that is what the exciting part is, Aisha Aman, that if banks are growing, for me, that is an indicator of where the economy is. Bank is a representation of credit. Credit is a representation of demand. Demand is a function of productivity. Productivity is a function of real underlying growth. And the growth, I think, is across categories. Retail, SME. Bajaj Finance is retail. IndusInd Bank is corporate. SME banks are largely MSME. So all categories are right now showing growth. And we are talking about December number. This is not like a passé number.
Yeah.
So October to December, the economy did well, which means numbers are going to be good. Now, whether markets have run up, how markets will digest them, let's see.
Okay, yes, indeed.